This is a CBS News special report. Good afternoon, everyone. I'm Maurice Dubois. President Trump making big news this afternoon. He's just announced a 90-day pause on tariffs for many countries around the world. In a Truth Social post here, it's a lengthy one. I'm going to read it to you. The president said, based on the lack of respect that China has shown to the world's markets, I am hereby raising the tariff charged to China by the United States of America to 125%, effective immediately. At some point, he said, hopefully in the near future, China will realize that the days of ripping off the USA and other countries is no longer sustainable or acceptable. Conversely, and based on the fact that more than 75 countries have called representatives of the United States, including the Departments of Commerce, Treasury, and the USTR, that's the U.S. Trade Representative, to negotiate a solution to the subjects being discussed relative to trade, trade barriers, tariffs, currency manipulation, and non-monetary tariffs, and that these countries have not, at my strong suggestion, retaliated in any way, shape, or form against the United States. I have authorized, the president says here, a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%, also effective immediately. Thank you for your attention to this matter. And that is the entirety of the president's Truth Social post there. All this has the stock market surging right now, up 5 and 3.3% there, up some 2,000 points at this moment. It's been going back and forth.
And we saw the successful negotiating strategy that President Trump implemented a week ago today. It has brought more than 75 countries forward to negotiate. It took great courage for him to stay the course until this moment. And what we have ended up with here, as I told everyone a week ago, they're in this very spot, do not retaliate and you will be rewarded. So every country in the world who wants to come and negotiate, we are willing to hear you. We're going to go down to a 10% baseline tariff for them, and China will be raised to 125 due to their insistence on escalation.
Ed, go ahead.
Secretary, thank you for doing this. Let me ask you 3 quick things, if I could, just for the sake of clarity, because the markets are open and they're wondering. First of all, Mexico and China, are they part of this 10% universal? Mexico and Canada. Are they part of the 10%?
Yes.
Okay. Second, given then that you have the rest of the world essentially calling it, it's not China, is this now just all about China?
Well, it's about bad actors, and what we will see is some of the very early countries are China's neighbors. That we're going to see. I'm seeing Vietnam today. Japan's at the front of the queue. South Korea, India. So we will see. And as I've repeatedly said, and President Trump has been saying it for years, China is the most imbalanced economy in the history of the modern world, and they are the biggest source of the U.S. trade problems. And indeed, they are problems for the rest of the world, because what we've seen is that as the U.S. announced the tariff wall last week, many of those goods have already started flooding into Europe.
So as you see it now, this trade war is China versus the rest of the world?
Well, I'm not calling it a trade war, but I'm saying that China has escalated, and President Trump responded very courageously to that, and we are going to work on a solution with our trading partners.
And if I could just, excuse me, Raquel, if I could just add to what the Secretary said. Many of you in the media clearly missed the art of the deal. You clearly failed to see what President Trump is doing here. You tried to say that the rest of the world would be moved closer to China when in fact we've seen the opposite effect. The entire world is calling the United States of America, not China, because they need our markets, they need our consumers, and they need this president in the Oval Office to talk to them. And that's exactly why more than 75 countries have called, because the United States of America is the best place in the world to do business. And as the president has shown great courage, as the Secretary has said, in choosing to retaliate against China even higher.
You know, Scott Bessent there, the Treasury Secretary, said that China is really the main pain point when it comes to the U.S. economy. Can you go into that a little bit, like why the U.S. feels like China is such a thorn in its side when it comes to trade and the economy?
Well, it is a strategic competitor, but it is also has this really strange symbiotic relationship with the United States. They trade with us, we trade with them. We absolutely kind of need one another, but the reality is China has turned itself into the sort of manufacturing warehouse of the world. They produce a lot and they send a lot, and they are very, very stringent about how they allow foreign companies and foreign economies to operate within their borders. So this has been a fight that's been running for decades, and it's not going to go anywhere. But we're really have reaching something of a tipping point, or a flashpoint rather. And the Trump administration is not going to let this go. And they are right to challenge some of what China's policies are and the way that they defend their own turf. But doing it with 104% tariffs may not be the way to go.
When it comes to China, I want to mention Besson said today what China is doing will have an impact for them more than us here in the U.S. because he says they have an export-driven model. But again, listen, big news this hour, Trump pushing pause on those reciprocal tariffs for 90 days.
Everyone gets a break except China. Tariffs against the world's second largest economy, that's China's, will now rise from 104% to a scheduled 125% tariff rate. Earlier today, China increased its retaliatory duties on U.S. imports to 84%. No word yet from Beijing on the latest increase from the Trump White House.
China is the most imbalanced economy in the history of the modern world, and they are the biggest source of the U.S. trade problems.
On Wall Street, well, the market flashed between red and green before, and this is the only word for it, skyrocketing after the president's announcement. The Dow surged 2,900 points up. The S&P 500 posted its biggest gain since 2008. And all we can now prepare for, I guess, is an elaborate game of let's make a deal.
A deal's going to be made with China. A deal's going to be made with every one of them. And there'll be fair deals. I just want fair.
I want to start tonight with Jill Schlesinger, who joins us from New York. Jill, you are very expert at this, but even by your long-standing expertise, today was a wild day.
Yeah, I mean, it's funny that you mentioned 2008 because that's exactly the feeling I got, that I remembered feeling in the October of 2008 where the market was collapsing and then there was some sort of deal to bail out the banks and then it finally went up. So all of this does feel a little bit eerie. To be clear, though, at that time we were facing a massive financial and housing crisis. We're not there now. And this dive and now the recovery feels self-inflicted. And I think that's the frustrating thing from the point of view of an investor, which is, why do we have to go through this? Couldn't we just do the 10% from the beginning?
And Jill, I'm so glad you mentioned the 10% because that gets sort of lost in the headlines about this. So that 10% tariff rate, which now the White House describes as a floor, still exists. Exactly. And lots of people are saying, wait a minute, that's a $300 billion tariff tax on the U.S. economy, not as large as these others, but it's still there. And not to mention the steel, the aluminum, the cars, the auto parts. And so, listen, I still think we face a problem. It's not as significant a problem, which is the market is telling this, and economists are telling us that we are facing a slowdown in economic growth, not as severe as we might have seen if those retaliatory tariffs were in place, as well as prices rising. That combination, that stagnating economy with inflation, stagflation, that is a scary word for a lot of people. It makes a lot of the business folks out there anxious because they really don't know what to do next. You know, Major, I was thinking about this. If you're at work and your boss tells you to go execute something, you say, fine, great, I'll go do it. And then 3 days later, it's a whole different game plan. You'd say, like, my God, that boss is crazy. Well, that's what we're living through. What about China and the tariffs that the president announced increasing today? How does that filter through all this? Well, I mean, I think it's going to be interesting to see what China does next. Remember that China has been preparing for this moment since election night. So they have been very skillful in not talking too much. They're building alliances with what were formerly enemies, and they are now talking about opening up alliances. I think there's a bit of a fear among the geopolitical part of this that we are pushing China into the arms of some of our allies. So I think these deals need to get done pretty quickly.
Otherwise, remember, China is a huge supplier. China is also a consumer of our goods, not in the same scale, but they are. And so it's a huge market. It's going to be interesting to see how we get to the end of these negotiations, Major. One last thing, not to bring you down, because I don't want to do that to you, buddy. But we talked about that big rise in 2008. The U.S. stock market during the financial crisis did not bottom out until 2009. So it's going to be a bumpy ride, everyone. Hang on.
But the big question is what happens between the U.S. and China, which, as we know, has only ratcheted up retaliatory tariffs. The Commerce Secretary, Howard Lutnick, saying that conversations, if they happen, it will be between President Trump and President Xi. President Trump saying he thinks that Xi will want to make a deal, but he is still waiting for the call. We do have a new statement this morning from China's Commerce Ministry saying that China's position is clear and consistent. The door to talks is open, but dialogue must be conducted on an equal basis. That, though, is a sign of more willingness to talk compared to statements we've seen in recent days. Errol.
So while most of the world gets a 90-day pause, as you mentioned, there's this increase in tariffs on China. And you spoke with, I understand, a toy store owner who is concerned about how that may continue to impact his business. What is he telling you?
Yeah, Errol, and that's because the Toy Association estimates that more than 80% of toys come from China. That's exactly what this local toy store owner, Everett Pyatt, told me. He and his wife opened their business more than 40 years ago. And he says, you know, during times like this, times of trade war, what typically happens is customers go for lower dollar purchases or kind of middle range purchases, staying away from those high ticket items. Here's part of our conversation.
Usually what happens is that the average sale goes down a little bit. People start looking for less expensive items. And so we tend to stock up more on middle range items because that's where the clientele is interested. The impact is going to be all across the economy because everything's not just toys, everything's having a tariff. So people will just have to adjust and make their own judgments about what's important in that particular family.
So as consumers start to change their habits, that puts pressures on these small business owners to try to figure out how they're going to change their orders of these products. And really everyone just waiting to see how long this lasts, if it's just temporary or if it continues for some time, Errol.
Turning to the stock markets, which have really been top of mind for both that meeting and for so many across the country. Markets tumbling out of the gate today. They have yet to recover after one of the most historic days of gains in recent history. The bounce back followed President Trump announcing a pause in reciprocal tariffs on most of the U.S.'s trade partners, while once again raising the levies on China. Yesterday, the president said he was increasing tariffs on Beijing to 125%. But when combined with an earlier 20% tariff to curb fentanyl, that number is up to 145%. 145% on some Chinese goods. All that uncertainty is being reflected in the market. Here's a look at the big board following the news. The Dow Jones is down 2.66%. S&P 500 and tech-heavy NASDAQ also suffering heavy losses. Despite yesterday's positive rebound, though, the market is still down overall since President Trump's so-called Liberation Day, of course, when he announced those sweeping tariffs and what he calls his reciprocal tariffs on almost all of the U.S.'s trade partners. As the markets falter, President Trump there meeting with his cabinet at the White House today, just wrapping up moments ago. And during that discussion, he stood by his decision to raise levies on China.
We're in very good shape. We think we're doing very well. Again, there'll be a transition cost and transition problems, but in the end, it's going to be a beautiful thing. We're doing again what we should have done many years ago. We let it get out of control, and we allowed some countries to get very big and very rich at our expense, and can't let that happen. It's not a sustainable formula.
There is, though, some positive news for the U.S. economy in all this. The latest numbers from the Bureau of Labor show consumer prices cooled more than expected in March, bringing inflation to 2.4% from the same time last year. Joining me here on set is CBS News Money Watch correspondent Kelly O'Grady, who has been a very busy person the past couple of days. But Kelly, I know that yesterday there was a lot of rallying. Despite yesterday's spike, though, the market's still down from where it was prior to all these tariffs being announced. What impact is this trade war that continues to evolve? What impact does it have on the U.S. economy overall?
Well, that remains to be seen, right? Because we don't know how much of these tariffs will get passed on by businesses to consumers. We also have that pause. So that 10%, where does it go in the future? Where does this, this up and down with China go in the future? I want to just go back to the markets for a second, because we were down, just when you were reading this intro, about 1,000 points or so, give or take. We were down in the Dow over 2,200 points at one point. And with the S&P 500, we were roughly about 6% down. The circuit breaks when you reach 7%, and trading is halted because there's too much volatility. And so I bring that up because investors had this moment of sugar high yesterday. And there was a lot of excitement that there might be deals to be had. And today, it's all sort of coming back to reality. And I was talking to a number of economists. They said, look, we didn't necessarily celebrate yesterday, because even if we have a 90-day reprieve, what happens after that? What happens with China? And what happens with consumer sentiment? Because consumers may decide to pull back on spending regardless of what happens. So I wanted to weave in the markets to answer your question, because you are seeing that anxiety about where the economy could go reflected again in the markets, even after yesterday's sort of euphoric piling back in.
Well, and you talk about markets and all the volatility. The president admits he was monitoring the bond markets, which have gotten a lot of attention today because it factored into his decision to extend, put a pause, I should say, on these tariffs for 90 days. Why does the bond markets, for people who don't understand, hold such sway in making these kinds of decisions?
All right, I'm going to get nerdy for a second here.
Do it.
Okay. So the bond market is traditionally thought of as a safe haven, a steady return, because what that means is you are buying, 10-year Treasury, 2-year Treasury, you are buying America's debt. And the idea is that America has a strong economy, a strong dollar, and they're going to be able to pay that debt. And so when you see money leaving the stock market, the idea is, well, it would likely go into bonds, because that's not going to get as high of a return as you might in the stock market, but you are betting on the U.S. and that being a safe economy to be in. We saw not a lot of interest in a couple of auctions for some of those bonds. And so the president, a lot of people are saying, was bullied by the bond market. We're hearing from the White House that it did factor somewhat into the decision. But really, this was just kind of if people aren't willing to buy that debt, that is a concern for the U.S.
And was that something that we saw even just Tuesday night going into Wednesday morning that triggered this about face?
Again, one of the things I think only in the president's mind will he know exactly what triggered it, but it was certainly a contributing factor.
Also, Kelly, as we mentioned, consumer prices, CPI, cooled last month. And it's important to note, of course, this does not include all of the effects that we've seen from these tariffs on and off. What's driving this slowdown in inflation?
Gas. So gas prices were down over 6% month over month. The monthly number, the average number from the report to compare that with, is down 0.1%. So 6% versus 0.1%, that's really where the losses were coming from. And I should say losses isn't the right word. Prices are still rising, just at a slower rate overall. So that's where that 2.4% comes from.
Now to our other big story. The markets closing moments ago as stocks erased much of the gains from yesterday's historic rally. So let's take a look at our interactive stock market heat map. This is brought to you by FinViz. It is showing the top 500 stocks in real time. Red indicating the stock is down. Green means it's up, and the size of the box represents market cap. Yesterday, we watched stocks bounce after President Trump pressed pause on some reciprocal tariffs. But today, it is a lot of red. So CBS News Money Watch correspondent Kelly O'Grady joins us live now to walk us through all of this. Boy, we had this great bump yesterday, and now I'd call today a slump. So what's going on?
Well, it could have been more than a slump, Jules. At one point, we were down over 2,100 points on the Dow, close to 6% on the S&P 500. And that's important because when it reaches 7%, it triggers what we like to call a circuit breaker, where trading actually is halted across the different indexes for 15 minutes. So things got pretty bad at one point. We were able to claw back some of those losses. So basically, though, what happened is yesterday, as you said, there was investor excitement that maybe these tariffs wouldn't be as bad as originally expected with that pause. But today, there was a little bit more of reality sinking in. Economists and analysts that I spoke to after the market closed yesterday said, we have not reached the bottom and we have not reached the end of this uncertainty and volatility. And that crept back into the market. Additionally, we got that tariff on China ratcheted up to a total of 145%, which just brings into question inflation, potential slowdown in economic growth. And so that's why you saw a big sell-off today, Jules.
Yeah, I was watching an earlier report, and you said we were all kind of on a sugar high yesterday, which I thought was pretty accurate. But what does this mean for American companies looking for their next move, especially those with big tech that rely heavily on China?
More uncertainty. That 90-day pause just puts a window that is extending all of these questions of what countries are going to have high tariffs. You know, is this going to be 10%? What countries are going to see deals done at the end of this? And so you're just going to see countries kind of, okay, clearly China's not the right place to be doing business. Do I move my production back here? Do I move my production to maybe a Vietnam or an India where there might still be a tariff, but it's not as expensive as having to move all of that back to the United States, where higher labor costs and startup costs, and of course it takes time, in case many years. So I think you're going to hear a lot of confusion and uncertainty for companies that are trying to plan, especially ones where their inventory, they are planning now months in advance of where to order from, where to produce. But when it comes to those companies in China, they are going to be trying to figure out, how do I avoid that? Where do I go instead?
Yeah, as China's 84% tariff on the U.S. takes effect, kind of set the stage. What goods does China buy from the U.S.?
So this is an interesting one, right? Because of the retaliatory tariff. So what industries in America are going to see it more difficult to sell there is essentially what you're asking. I think we've got a graphic actually where I can run you through some of the things that China buys from us. So farming, agriculture, this is a big one. The farmers in America got hit really hard the last time around under the first Trump administration, and we are seeing China target those specific industries. Again, we also sell oil to them, pharmaceuticals, basic chemicals, resins and synthetic fibers, motor vehicles. It's a long list. But what I will note is the U.S. buys a lot more from China than they do from us. So that's where that trade imbalance comes from that you've heard the president talk about.
All right, earnings season, it starts tomorrow. So what can we expect from that?
Yeah, more uncertainty. You're going to hear, Jules, uncertainty said by CEOs constantly. I'm going to be counting the number of times. We get the big banks reporting tomorrow, JP Morgan, Morgan Stanley, Wells Fargo. We are going to be listening to hear, what do they think about where the economy is going, and what do they think about where the consumer is going? Are they seeing a slowdown? That's going to be a really important moment, Jules.
All right, good information. Kelly O'Grady. Kelly, thank you.